Good afternoon, one and all. Thank you very much for tuning into this MEED Live webinar on the oil and gas industry in Abu Dhabi. What a time to be discussing oil and gas projects and investments in Abu Dhabi. The Abu Dhabi oil and gas industry is witnessing a wave of capital expenditure on projects owing largely to the high oil price environment in general this year. Brent crude was, I think, trading at about $83.6 a barrel when I checked the last time, which was about half an hour ago, I think. And apart from the high oil price environment, well, high and stable oil price environment, it's also the push towards increasing gas production, decarbonization efforts, and the UAE's broad commitment to clean energy goals, as we witnessed during COP28 in Dubai last year. And of course, the emphasis on petrochemical and chemical development. All of these factors put together, so high and stable oil price environment, the push towards gas production and becoming self-reliant in gas, sort of a push towards developing the petrochemical and chemical sector out here in Abu Dhabi, as well as the push towards clean energy goals. All of this is having cumulatively a very positive impact on the Abu Dhabi oil and gas projects market. And over the next hour or so, I am going to be discussing a lot of these projects and investments in detail with you. So really a very prolific period in the industry. And it's a great time to be delving into the Abu Dhabi oil and gas projects market. My name is Indrajit Sen, and I have the absolute pleasure of welcoming you as the host and presenter for this webinar today. Some of you might know me already through the numerous interactions we've had over the years. Most of you wouldn't. So as a way of introducing myself, I am the oil and gas editor at MEED. I have been with MEED for about 7 years now. Prior to MEED, I used to be the editor of a magazine called Oil and Gas Middle East from 2014 until 17. I started my career back in India with the Times of India newspaper and then moved to Oman back in 2011. And I've been with MEED since 2017. And like I mentioned, I've been covering the oil and gas industry since then. Right, that's enough about me. So a bit about MEED before we launch into the presentation. Now, let me talk a bit about MEED and what we do. We are owned by London headquartered Global Data, which is our parent organization. MEED was established 67 years ago in 1957, and we have been covering and tracking projects across the oil, gas, construction, transport, power, water, infrastructure, you name it, all the heavy industrial sectors, the main revenue generators for the economy in the Middle East and North Africa region. Since then, since 1957, our intelligence when it comes to project developments, the project life cycles, I could claim to be unparalleled. And we can literally look our competition in the rearview mirror when it comes to project tracking and reporting. Now, why are we discussing the Abu Dhabi oil and gas projects market today? Today's webinar coincides with the launch of our new comprehensive report on the Abu Dhabi oil and gas market for the 2024-25 period. It is an exhaustive research work on the oil, gas, and petrochemicals market in Abu Dhabi, prepared by a team of analysts. So do make sure to grab a copy of this report to help yourself understand the project's landscape, the direction of travel for the market, and focus of client investments to be able to make informed decisions. And also, just to sort of mark and commemorate this webinar today, we have a special discount for you. If you purchase the report using the code mentioned here, the QR code, you get an additional $100 discount. All right, before we launch into a full-on discussion of the Abu Dhabi oil and gas market, let's just take a step back and analyze the overall Middle East and North Africa oil, gas, and chemicals market as it stands today. And that'll help us build context as to where the UAE and more specifically Abu Dhabi stands in the larger scheme of things. So as you can see, this is a chart that details sort of planned projects, the value of active planned projects, which is projects that have not been awarded yet in the entire Middle East, North Africa region. No surprises there. Saudi Arabia has the largest share of all active oil, gas, and chemical mega projects, followed by Iraq and the UAE. The UAE stands at number 3. In the Maghreb region or North Africa, Egypt is the largest market. And the UAE and Qatar are the second and third largest markets in the GCC, respectively, after KSA. So that's where the region stands in general. Now, let's take a look at the MEED oil and gas and chemical projects in different stages. So under execution, the value of gas projects is considerably larger than projects under execution in the oil and chemical sectors, and that really is symbolic of the heavy emphasis that hydrocarbon producers in the Gulf region specifically and broadly in the MENA region are placing on increasing their gas production capacity. Qatar, as we know, is the largest gas producer in the region and one of the largest in the world, obviously. It is also the largest LNG producer and supplier. Obviously, there's a great tussle that goes on between Qatar, the US, and Australia. So there's sort of a stiff competition over there. Now, when it comes to planned projects, the value of gas projects also emerges as the largest segment. So when you look towards the future, obviously, gas is going to dominate sort of spending in the months and years to follow, obviously in line with the energy transition commitments of the various regional countries and the great role that natural gas has to play in that energy transition as a key transition or a bridge sort of fuel. Oil projects obviously are not going anywhere. You can see 33% of all planned projects in the region belongs to oil. So still significant investments going into oil projects. And obviously chemicals is there at number 3 with 29%. So that, I mean, these pie charts really sort of dictate the changing capex trends over the last few years. And obviously going forward, gas is going to dominate the oil and gas project spending in the region. And obviously, when we move on to the next slide, we are going to see how things are in Abu Dhabi. So the value of gas projects under execution, again, is considerably larger than projects under execution in the oil and chemical sectors. And also when it comes to planned projects, the value of petrochemical projects emerges as the largest segment, with oil following at second. We will come to understanding why chemical projects will, as per MEED projects data, is going to dominate spending in the months and years to follow. That is driven largely by Abu Dhabi's push towards developing the larger energy value chain in the form of Dhabis and the chemical zone that sort of Dhabis has been tasked with developing in Abu Dhabi. We will take a closer look at that in detail. Right, let's now see where the money has gone in Abu Dhabi. And when it comes to capital expenditure, obviously, it's no brainer that ADNOC is the largest client. Obviously, there are a few smaller independent, well, not oil and gas producers, but definitely energy project developers in Abu Dhabi and in other Emirates of the UAE, namely Fujairah, Dubai, Ras Al Khaimah. But today, of course, today's webinar is exclusively on Abu Dhabi. So we are going to talk about the Emirate of Abu Dhabi and the projects that are being launched in the past and in future by ADNOC. And as you can see from this chart, this is a chart that details project spending by ADNOC in the last 13 years or so. So from 2010 until year to date, that is in the 4 months of 2024. And you can see that last year was the best year on record so far in the Emirate of Abu Dhabi. And well, I mean, most of you covering or being involved in the oil and gas industry in Abu Dhabi would know what the reason is. Last year in October, the almost $17 billion worth of EPC projects were awarded by ADNOC for the Hale and Kasha mega project. And that has literally helped CapEx rocket to that level of almost $29 billion last year. So an emphatic historic year for project investments in Abu Dhabi in 2023. All right. Now, in terms of where the spending has taken place since 2010, you can see that oil projects have dominated spending in Abu Dhabi since the start of the previous decade, that is since 2010, followed by gas at 34%. And when we see which contractors have performed well in the Abu Dhabi oil and gas market, Tecnimont from Italy has really outperformed all the other contractors in the Emirate. And that is largely due to project contracts that they won since the start of 2020, namely the Perouge 4 contract in 2021. We obviously are going to talk about that in detail a little later on. And the $8.7 billion onshore package of the Hail and Ghasha mega project that they won in October last year, that again is believed to be the single largest EPC package awarded by ADNOC till date so far. And Tecnimont is the sole contractor performing EPC works on that package, the onshore package of the Hail and Ghasha sort of mega project. Tecnimont also has won the Meram project of ADNOC Gas just last year as well, in partnership with Abu Dhabi's NMDC Energy, which used to be until very recently called NPCC, who are our second largest contractor in that list. Obviously followed by Saipem, ENPPI from Egypt, Technigas Reunidas of Spain, CPCC from China, and then you can see the whole list. Petrofac still in that top 10 contractors ranking. Before I go on to the next slide, I would encourage you to use that comment box to pose any questions that you might have for me, and I will try to take them along as I go. I can see that a couple of questions have popped along already. There's a question about if the slides need to be purchased. Certainly not. If you're registered as an attendee for this webinar, this will be provided to your inbox at the end of this presentation. Right. Let's come back to the presentation, and I will give way for further questions along the way. Now, before we continue with the slide, I have a poll question for you. And Nabil, if you could push this poll question to our audience. And the question is, I'd really like to know from you, which industry segment do you see ADNOC spending the most on until the end of 2025? So from now on until the end of next year, so in the next sort of 18 months, where do you see most of the project investments by ADNOC going into? Do you think it's going to be oil? Do you think it's going to be gas? We've seen a lot of LNG project investments taking place around in the GCC as well as in the wider region. Or do you think petrochemicals and chemicals is going to be a dominant sort of sector that will command a lot of spending by ADNOC in the months to follow? So take some time out to answer this question. It'll give us a better understanding of what the market feels is the direction of travel for the Abu Dhabi market. Right. Oh, there you go. You've got the poll results already, and a number of you have voted already. 52% of you feel gas, including LNG, is going to be the dominant spending sector in the years to follow. I can't say I agree more. Absolutely. If we look at some of the previous slides as we discussed, and where the most of the money has gone into by ADNOC, and obviously that's in line with the broader strategic goals of becoming self-sufficient in gas by 2030, it's a no-brainer. Billions of dollars worth of projects in gas are set to be pushed through in the period from now until 2025, and of course beyond as well. All right. Let me make progress with the presentation now. Right. Let's now take a deep dive into ADNOC and what the company has been up to over the last few years and where it is headed in the next few years from now on. Abu Dhabi National Oil Company is the largest industrial entity in the UAE, which is wholly owned by the Abu Dhabi government. ADNOC was founded in 1971, although it began hydrocarbon exploration and production activities in 1930s. So it's quite a rich and diversified history, something they can be very proud of over the decades. ADNOC today is a diversified energy company with 16 subsidiary companies that are engaged in various businesses, including production of crude oil and natural gas, oil refining, gas processing, production of LNG, liquefied natural gas, petrochemicals, and fertilizers. So across the board, quite a diversified energy conglomerate. Some of the subsidiary companies like ADNOC Gas, ADNOC Logistics and Services are also listed, whereas some of the other listed in the Abu Dhabi Stock Exchange, ADX is what I meant. And some of the other subsidiary companies like ADNOC Offshore, ADNOC Onshore have multiple overseas stakeholders as well, with ADNOC Group holding the majority stake in those subsidiary companies. ADNOC currently has the capacity to produce 4 million barrels a day of crude oil and 10 billion standard cubic feet a day of gas. I apologize for the typo error in that sentence. The state enterprise has been set an objective of achieving an oil production capacity of 5 million barrels a day by 2027 and becoming self-sufficient in gas production by the end of this decade. So that is where we believe to sort of achieve that goal of self-sufficiency in gas is where the maximum amount of project investments are going to take place in the months and years to follow. And like most of you have mentioned in the poll question, it seems the majority of us believe that is where the capex is going to be allocated. Now, in November 2022, ADNOC's board of directors approved the company's 5-year business plan and capital expenditure allocation of $550 billion, which is about 150 billion, which is to be spent between last year and 2027. So quite the significant chunk of money that is going to be dedicated towards project investments. It was also at this meeting that the board brought forward ADNOC's 5 million barrels per day oil production target from 2030 to 2027. So that is quite a significant sort of leap of faith, if you like. The previous target for ADNOC was to achieve a spare oil production capacity of 5 million barrels per day by 2030, which was then brought forward by 3 years to 2027, and which is why you can see a lot of oil project investments taking place last year and obviously so far this year as well. How was it last year? Well, ADNOC spent close to $22 billion on upstream projects in 2023, in what was a record year for oil and gas project spending in the UAE, if not the best year on record so far. This is something I mentioned a little while ago. That was driven mainly by the $17 billion worth almost of spending that ADNOC did on the Hail and Ghasha mega project. So that really drove capital expenditure in 2023 and making it a remarkable year for project capex. Going forward, ADNOC is expected to maintain a robust spending on upstream projects this year, if not match the 2023 level. You'd be surprised to know. And why is that? Obviously, since it is striving to achieve its oil and gas production targets. So in order to be able to achieve those goals, those targets by 2027 for oil and the goal of self-sufficiency in gas by 2030, ADNOC has to continuously pump money into projects to be able to get closer to the targets and eventually achieve them by those set deadlines. This year has kicked off on a very positive note already. ADNOC is understood to have already spent more than $5.6 billion so far this year. So in the 4 months of this year, $5.6 billion almost has been spent on projects deemed vital to reaching its crude production goal, as well as the gas objective by 2030. Right. Now, we've spoken about the upstream goals of gas production and oil production. Now, let's take a look at what the downstream objectives are. By downstream, we also classify the midstream, the oil and gas transportation and sort of processing sector into the downstream domain. So let's take a look at what the downstream objectives are. ADNOC Refining, which formerly used to be known as Takrir, is the main crude oil refining business of ADNOC Group, with the parent company owning the majority 65% stake. Italian energy major Eni, or ENI, and Austria's OMV own 20% and 15% stakes in the company, respectively. ADNOC Refining has a total capacity of refining 922,000 barrels a day of crude oil and condensates. The company produces over 40 million tons a year of refined products such as LPG, naphtha, gasoline, jet fuel, gas oil, base oil, fuel oil, petrochemical feedstocks, you name it, ethylene, propylene, all of that. ADNOC Refining is that main business responsible for it. The company's specialty products include carbon black and anode coke as well. Now, what is the goal for ADNOC Refining in the period to come? Well, ADNOC Refining has been set a target to increase its refining capacity to about 1.5 million barrels per day in the long term through various greenfield and brownfield projects. And we'll take a look at some of those projects that have been pushed through by ADNOC Refining to achieve that target. And obviously, a considerable amount of capex has been dedicated by ADNOC Refining towards those projects. ADNOC Gas is the main natural gas producing and processing subsidiary of ADNOC Group. ADNOC Gas processes about 10 billion cubic feet a day of gas across 8 onshore and offshore sites, including its Asab, Bab, Buhasa, Habshan, and Ruwais plants. So the gas that is mainly produced by ADNOC onshore, ADNOC offshore, and ADNOC Sar gas that is sent to these 8 or so processing facilities across the Emirates of Abu Dhabi. And ADNOC Gas is a company or the ADNOC Group subsidiary responsible for processing that gas into various other products. The company, ADNOC Gas, also owns a 3,250-kilometer pipeline network across the UAE, through which the gas that it processes every day is pumped to various customers in Abu Dhabi, in Dubai, and in the Northern Emirates. So quite a vital pipeline network. And we'll go into detail about how ADNOC Gas is looking to expand that pipeline network, to spread it out even further across the UAE. ADNOC Gas also produces about 6 million tons a year of LNG from its facilities on Das Island, located off the Abu Dhabi coast. It's a huge offshore island facility that is located at a few kilometers away from the coast of Abu Dhabi. Sprawling, impressive island, artificial island. And the planned LNG facility in Ruwais is projected to increase the company's LNG production capacity by 1.5 times to 15 million tons a year. Again, we'll come back to this project. So ADNOC is very close to awarding the full EPC contracts for a massive Ruwais, an LNG production facility in Ruwais, which, like is mentioned in the slide, will increase its LNG production capacity by 1.5 times. So from 6 million tons a year to 15 million tons a year. So huge project. We will talk about this in detail. The company also supplies 1 billion cubic feet of gas a day to the UAE's national grid, mainly through that sales gas pipeline network, and is a gas and LNG provider to other utility companies, portfolio players, and commodity traders overseas. So not just domestically, but also a major supplier of gas and its associated products internationally. All right. We've talked about upstream goals. We've talked about downstream objectives. Now let's take a look at the petrochemical ambitions that ADNOC Group has for the future. Perouge is Abu Dhabi's main producer of petrochemicals. ADNOC Group owns the majority 70.84% stake in Perouge, with Austria's Borealis holding a 19.16% stake. The remainder of the 10% share is traded on the Abu Dhabi Stock Exchange. In November 2021, ADNOC and Borealis signed the final investment decision for a 4th expansion phase of the Perouge petrochemicals facility located in Abu Dhabi's Ruwais. The main EPC contracts for the estimated 6.2 billion Perouge 4 mega project were awarded in December of 2021. Huge project. It really is that 4th expansion phase of the Perouge facility, which has been operating in Ruwais, Abu Dhabi since the 1980s. It is one of the foremost producers of petrochemicals in the world, not just here in Abu Dhabi, and is a huge revenue generator for ADNOC. Now, what is this Perouge 4 mega project, or the fourth expansion phase of Perouge, all about? The upcoming Perouge 4 polyolefins complex will feature 2 polyethylene plants, each with a capacity of 700,000 tons a year, which really will cement Abu Dhabi's position as a major producer of petrochemicals. The plants will be supplied by an ethane cracker with a capacity of more than 1.5 million tons a year of ethylene, as well as associated ethylene derivatives. So tremendous project for Abu Dhabi over there. Now, the EPC works on the Perouge 4 mega project. Obviously, the contracts were awarded in 2021, specifically December 2021. And as per the last announcement and data collected by the MEED Projects team, the EPC work has exceeded or almost reached the 60% mark, with the facility set to be commissioned next year, sometime in 2025. Away from main petrochemicals production, obviously Abu Dhabi and the UAE government in general wants to extract maximum value from the petrochemical products it produces at Perouge, namely ethylene and propylene. The vision is to use these as feedstock to develop a sprawling specialty chemicals and industrial chemicals facility in Abu Dhabi, which is going to generate a lot of foreign investments. And this target or objective, if you like, has been codenamed Operation 300 billion. So the target is to reach 300 billion worth of investments into developing this diversified chemicals complex in Ruwais Industrial City in Abu Dhabi. And the Ministry of Industry and Advanced Technology of the UAE is sort of leading this UAE's industrial growth strategy. And like I mentioned, the aim is to raise the chemical sector's contribution to the country's national GDP to $81.7 billion, or 300 billion dirhams, by 2031. Now, in line with this, ADNOC is overseeing the development of a sprawling specialty chemicals production complex in Ruwais that will mainly draw feedstock from Perouge to produce a range of chemicals. So it'll draw those main sort of feedstocks from Ruwais, from the Perouge 4 project in Ruwais, process them into industrial chemicals and ship it out to the world. And for that, obviously, a whole host of foreign chemical producers have committed investments in that Dhabis complex. Dhabis is a 60-40 joint venture of ADNOC and Abu Dhabi's industrial holding company, ADQ. So Dhabis has been put in charge of leading the development of this chemicals production zone in Abu Dhabi. We will take a detailed look at what Dhabis is doing and the various projects it is leading towards the latter half of this presentation. I will pause for questions, and let's see what questions have come through so far. Why is this year's business projection showing low? I would beg to differ. You haven't mentioned your name. I would urge you to put in your name and the company you represent in the dialogue box over there. That'll just help build the conversation a lot better. To answer your question, like I mentioned, $5.6 billion worth of projects have already been awarded in the first 4 months, and that's just on sort of the capital projects, on the big ticket projects by ADNOC. There may be a few $100 million spent more on the smaller brownfield projects, which unfortunately tends to slip under MEED's radar. We do not normally cover those sort of the smaller market segments, but we believe there is a significant amount of investments that has been pumped already so far this year. So the indications are fairly upright, and hopefully this, I mean, if not match last year's level of record spending, this year, 2024, is also set to be a very impressive year in terms of project investments. And let's just not also forget or lose sight of the fact that the Hail and Ghasha projects that were awarded last year will also start to have a trickle down, sort of a cascading effect in the market, because the contractors that have been put in charge for the onshore and offshore packages of that mega project have in turn become clients themselves. So they will place sort of multi-billion-dollar orders going forward. I mean, each of those packages are more than $8 billion themselves. So a lot of those sort of that order value is going to translate itself into equipment and procurement orders in the months to follow as execution picks up pace in the months to come. There's another question from Mr. Ali Sayed. Does Abu Dhabi have the infrastructure to support such obvious shift in spending on LNG? Are there plans to spend on infrastructure, LNG ships too? Well, obviously, the Ruwais LNG project, which I promised we will come back to a little later in the presentation, is sort of the prime example of the ambition that ADNOC and the Abu Dhabi government has towards stepping up to the plate when it comes to LNG production. Obviously, that is a $5 billion plus project that will significantly increase the LNG production capabilities of ADNOC. And I mean, there is a sort of a race that is underway in the Gulf. Qatar, obviously, is beyond anyone's reach at this moment when it comes to the LNG space. But if you look at what's been taking place in Oman this year, the Marsa LNG project of Total Energies was awarded sort of just a few weeks ago. MEED was the first one to report about that. I think it was in February or January, can't quite remember. But yeah, that's another $1 billion project in Oman. So there's really this sort of competition going on between ADNOC and sort of Oman and the other regional players when it comes to LNG. So we will see a lot of infrastructure development. Obviously, it just won't stop with that Ruwais LNG project. There will be more gas that is expected to be pumped into the LNG segment. Right, I think there's another question about, oh no, I think it's a different question about, besides Ruwais, are the other projects spread over the remaining onshore sites? Are you going to share the presentation slides? Of course, the presentation will be made available to you at the end of this webinar. Yes, a lot of, I mean, obviously there is significant oil project investments that ADNOC onshore and ADNOC offshore has already committed to and will continue to spend on because these are the two main subsidiary companies that are sort of leading the charge towards that 5 million barrels per day production target by 2027. So they have to, they simply don't have any choice. They do have to continue spending on onshore projects in the fields of Ba, Buhasa, Shah, Kusawira, the southeast fields, the northeast fields, all of that. If you track MEED projects and MEED.com on a regular basis, we try and keep on top of some of those projects that are being executed and advanced in their various stages. Right, let me come back to my presentation, and I promise I will give way to questions from here on. Right, decarbonization, COP28 really demonstrated the UAE's leadership role when it comes to clean energy initiatives and the sort of commitment that the UAE government has towards achieving net zero targets. Those are very firm commitments that have been announced, and the UAE government in general, and Abu Dhabi being the largest industrial emirate in the country, is sort of racing towards. What is ADNOC doing towards decarbonization? Obviously, as the largest industrial player, they have to take the charge of decarbonization in the country and in the emirate. So ADNOC's board of directors increased its budget allocation for investment in decarbonization projects, technologies, and lower carbon solutions to $23 billion. Last January, the board of directors had allocated $15 billion to ADNOC's decarbonization budget. So it was really increased almost by $10 billion, but $8 billion from $15 billion to $23 billion. All of that money, or rather the lion's share of that capital allocation for decarbonization is going to be spent on projects that will translate themselves into EPC projects going forward. What is the target specifically for ADNOC? Well, they have been set a goal of achieving a carbon capture and storage capacity of 10 million tons a year by 2030. They've also been set an overall target of attaining net zero emissions by 2045 and reaching zero methane emissions by 2030. So very firm commitments. The goals are in place. ADNOC has to spend a chunk of their of that budget that they have been set for decarbonization towards attaining those net zero and zero methane emissions goals. ADNOC's decarbonization projects, which will enable it to meet its target of a 25% reduction in carbon intensity by 2030, include using clean energy to meet 100% of its onshore grid electricity needs. It has been striving to achieve this goal since the start of 2022 through a scheme known as Project Wave. Now, I believe there was a question from a gentleman named Mr. Najir about ADNOC looking for alternate energy sources from sea, wind, and energy. So, Mr. Najir, that's the answer to your question. Obviously, there is Project Wave, through which the endeavor is to use clean energy to meet 100% of ADNOC's onshore grid electricity needs. So completely a clean energy project. Moreover, through another estimated $3.8 billion project, which is known as Project Lightning, ADNOC intends to connect its offshore operations to that grid. Upon completion, that can reduce its offshore carbon footprint by up to 50%. So quite an ambitious project in its scope and the intended achievements. Moreover, in October of last year, I remember, I think the contract for this project was awarded during ADIPEC last year. ADNOC Gas awarded UK-headquartered Petrofac the main EPC contract for a project worth $615 million to develop a large carbon capture facility at its Habshan gas processing complex in Abu Dhabi. The planned Habshan carbon capture, usage, and storage facility will have the capacity to capture and permanently store 1.5 million tons a year of carbon dioxide within geological formations deep underground. So quite a novel concept. You capture the carbon emissions from gas processing facilities, and you look to trap that in formations underground, so that over time it sort of really mixes with the underground environment to probably produce more fossil fuel reserves over time. And obviously you can safely store that carbon emission underground rather than releasing it into the atmosphere. So quite a novel project. Now this project is expected to triple ADNOC's carbon capture capacity to 2.3 million tons a year, which is equivalent to removing 500,000 gasoline-powered cars from the road every year. So a great commitment, great display of that willingness really to sort of achieve a meaningful energy transition through decarbonization and several other initiatives. Obviously, there is many more sort of projects, efforts, pilot projects, studies, research, collaborations with overseas players that ADNOC Group is doing almost on a weekly basis, if you ask me. Obviously, I couldn't cover all of that in this presentation, but there is a sort of roadmap towards achieving these net zero emissions by 2045 and the zero methane emissions by 2030. And we can see a sort of demonstration of those efforts playing out in the market. Right, let's now take a deeper look into some of the projects that have been launched in the market in the last 18 months or so, and the planned projects that are going to come through in the months and years to follow. Right, now this is a chart of the top 20 Abu Dhabi oil, gas, and petrochemical projects under execution. Contracts for most of these projects were awarded during last year, obviously. Some of them were awarded in 2021, a few of them obviously also back in 2018, so in the last decade. And also several of them awarded so far this year. No surprises there. The Hail and Ghasha onshore and offshore packages top the charts of projects under execution in Abu Dhabi. And ADNOC has awarded projects worth a total of approximately $34 billion in the last 16 months. So from the start of 2023 till today, $34 billion is what our in-house estimates suggest has been awarded by ADNOC in order to achieve, again, its oil, gas, and petrochemical goals. So the onshore and offshore EPC packages, the Hail and Ghasha project, dominate that sort of spending. The Meram project, we will take a deeper look into what that project stands for. That was worth $3.6 billion awarded to Técnicas Reunidas of Spain. I stand corrected. I see someone from the audience pointing that out. I believe I mentioned Tecnimont being the contractor. My apologies for that. It was Técnicas Reunidas and NMDC in a consortium that was awarded that project last year. West East Pipeline, again, a huge project, $2.4 billion project that was also awarded earlier this year. We will talk about the Dhabis projects again in a bit more detail. Later on, a number of these independent third-party investment projects have been awarded. Some of those are in a very advanced stage, very close to being awarded to contractors. We will take a look at those a little later on. You can see the multiple packages of the Perouge 4 mega project that were awarded in 2021. And as I mentioned previously, we expect Perouge 4 to be commissioned some point next year. Right, so this is the list of projects that are currently under execution. EPC works are in full flow as we speak. And if we turn our attention to some of these projects, and as I promised, we will take a closer look at some of these mega projects that are really the driving force behind Abu Dhabi's sort of oil, gas, and petrochemical ambitions. It really plays out as having a significant impact. So Hail and Ghasha mega project, we cannot just speak enough about this project and the galvanizing effect it has had on the market. The Hail and Ghasha fields is part of a larger concession, which is located offshore Abu Dhabi. It's called the Ghasha concession. ADNOC holds the majority 55% stake in that offshore concession. The other stakeholders are Eni from Italy with 25%, Germany's Wintershall, DEA with 10%, OMV and Russia's Lukoil each with 5%. And these fields are located along with several other fields like the Head, Dalma, Sata, Buhasir, the Nasser, Sarb, Shuwaihat, Mubarak's fields, all located in these concession. And the long-term plan, we hear from our industry sources, is to develop. So some of these are obviously producing assets, but the long-term ambition for ADNOC is to develop these gas fields, which are very rich in sour gas reserves over the years. Obviously, along with the sort of wish and the commitment to develop gas resources from these fields, also comes the challenge of having to deal with the extremely high hydrogen sulfide content that these fields contain. We're talking about 20 to 23% of H2S in some of these fields, which is sort of mixed with the gas reserves, making it extremely challenging geologically and technically to be able to produce gas. But nonetheless, I mean, that sort of explains why the Hail and Ghasha project is so huge in capital expenditure magnitude, because obviously you need a lot of technical expertise, a lot of innovative concepts and sort of never tried before project execution capabilities to be able to successfully deliver this project in time and within budget. ADNOC and its partners, as has been mentioned before, in the Ghasha concession, dominated spending in 2023, awarding contracts worth $16.94 billion in October for EPC works on this mega project. A consortium of Abu Dhabi's NMDC Energy and Italian contractor Saipem was awarded the project's offshore EPC package. That is valued at $8.2 billion, and the scope of work broadly involves the EPC of offshore facilities, including facilities on artificial islands and subsea pipelines. So a lot of the offshore work is going to take place on these artificial islands away from land. So those two contractors are in charge of developing that part of the project. And Technimont was awarded the onshore EPC contract. They are the sole contractor on the onshore EPC package, worth about $8.74 billion. And the scope of work relates to the EPC of onshore facilities, including carbon dioxide and sulfur recovery and handling. So a considerable sort of environmental aspect in the Hail and Ghasha project as well. It's not just about gas production, but also taking care of the environment and the potential damage to the environment that the hydrogen sulfide release can cause to the marine ecology. So ADNOC has paid a lot of attention towards that aspect. Now, this investment, as we've said, represents the largest ever capex on a single oil and gas project in the UAE, and is a giant leap for the country in its goal of becoming self-sufficient in gas, and also having a galvanizing, cascading effect on the wider oil and gas supply chain as those procurement orders continue to be placed. Right. Now, Meram, the biggest EPC contractor award last year on a downstream project in Abu Dhabi was that $3.6 billion contract that was awarded by ADNOC Gas. A consortium of NMDC Energy and Spanish contractor Técnicas Reunidas won the main EPC contractor for Project Meram in August of last year. The scheme aims to increase ethane extraction by about 35 to 40% from ADNOC Gas's existing onshore facilities in the Habshan gas processing complex by constructing new gas processing facilities. This project sits right underneath the Hail and Ghasha project packages, so really coming in at number 3 is quite a significant project there, both in value and also in terms of the goals it looks to achieve. Separately, ADNOC Gas, as I mentioned earlier about expanding the sales gas pipeline network across the UAE, ADNOC Gas is making progress with that project, which has been codenamed ST-Dharma, which will enhance its gas transport and pumping capabilities across the UAE. The project will cater to rising demand for gas from industrial consumers in Abu Dhabi, in Dubai, in Sharjah, in the Northern Emirates. So quite a pan-UAE project in its nature and scope. EPC works in the estimated $2 billion plus ST-Dharma project have been divided into 7 packages. In July of last year, ADNOC Gas awarded the EPC contractor for package 2, valued at $720 million to Petrofac, and package 3, valued at about $630 million, was awarded to a consortium of NMDC Energy and Lebanese contractor CAT Group. Abu Dhabi's ISCO had previously won package 1 of the project, which is valued at approximately $18 million and relates to sort of early civil works and site preparation for the ST-Dharma project. Meanwhile, ADNOC Gas has received interest from contractors for a new pipeline it intends to build to transport gas as feedstock from its Habshan gas processing complex to its planned LNG terminal in Ruwais. This is an intra-Abu Dhabi pipeline segment that ADNOC Gas intends to build, and that will cover a distance of about 190 kilometers, which is to be built in 2 sections. And this is the newest and the latest package, which will be package number 8 of the ST-Dharma project. We've covered that in detail on MEED.com as news, as well as on MEED Projects. You will find more details about this new package. The expressions of interests have been submitted by contractors, and now the wait begins for the actual sort of tender to be issued by ADNOC Gas. It is also worth mentioning at this stage that China Petroleum Pipeline Engineering is performing the FEED works on this project. The FEED work is at a very advanced stage, and you could expect the tender for package 8 of the ST-Dharma project to be issued probably may well take place in June, considering the expressions, the pre-qualification process has been completed, or it might be in the second half of the year. Right. another huge oil project that was awarded earlier this year, and we are talking about the Upper Zakum offshore oil field expansion. The Upper Zakum field is located 84 kilometers offshore in Abu Dhabi and is the world's second largest offshore field and the fourth largest oil field in the world. ADNOC Offshore initiated that project way back in 2019, and the initial goal was to increase the oil production potential of the Upper Zakum field to 1 million barrels a day by 2024. Now, that goal was eventually then revised to 1.2 million barrels per day. Obviously, that is not going to be achieved by 2024, but you could expect that to take place. The project to be delivered, completed, commissioned in, say, 2027. But the new name of the project, ever since the revision of the target, was changed to UZ 1.2 MMBD. Spanish contractor Técnicas Reunidas was awarded the project for the FEED on this UZ 1.2 MMBD project back in 2019. Wood Group was appointed as the project management consultant for the EPC phase. A lot of water has flowed under the bridge since then, and just in March, a couple of months ago, around mid-March, the main EPC contract was awarded to Abu Dhabi's Target Engineering Construction Company after a lot of negotiations and a lot of deliberations on the execution strategy for this project. So Target is a winner of this project, and the EPC contract is estimated to be valued at $825 million. Again, gives me a lot of pride to say that MEED was the first to report on this project and the winner. What is this project really all about? The main scope of work involves EPC of several surface facilities and plants at the Upper Zakum offshore development's 4 main artificial islands of Al Galan, Al Anbar, Etuk, and Asifia, also known as Central, West, North, and South Islands, respectively. So the EPC has to take place in parallel, and development of facilities on these 4 islands has to go in tandem, hand in hand. The previous phase, obviously, there was an early expansion phase, which was called the UZ 750 project, and EPC contractors for those projects were awarded between 2012 and early 2013. Who were the winners? It was NMDC Energy, back then known as NPCC, of course, and along with, of course, France's Technip Energies, which was awarded that $817 million main package. Well, it was the smaller package, beg your pardon, and package 2, the project's largest EPC package, worth about $3.7 billion, was awarded to a consortium of Petrofac and South Korea's Daewoo Shipbuilding and Engineering. EPC work began on that project, UZ 750, began in 2014 and was completed in 2022. Right, time now to throw another question at you. Considering the range of projects that we've discussed so far, I'd really like you to get your opinion on whether in the last few years, as you've seen, ADNOC has increasingly used the FEED to EPC competition format for some of its major projects instead of the conventional EPC model. Going forward, to expect the role of FEED to EPC contests in ADNOC projects to either increase or decrease. Let me know what you think. And really, since I would say both project execution models have inherent benefits, ADNOC has been using the FEED to EPC model for several projects since 2018, at least, if memory serves me right. The latest example is the LNG 2.0 project that ADNOC Gas has launched to increase ethane output and reduce greenhouse gas emissions at its Das Island facility. And there are more examples, more recent examples, actually, along with the LNG 2.0 project. Another ADNOC Gas project, which really sort of involves adding a 5th liquefaction, fractionation train to the Ruwais gas processing facility, will use that FEED to EPC sort of model as well. Separately, even ADNOC Refining has launched another project of FEED to EPC competition. to maximize naphtha production, which is separate to that ethane maximization project of ADNOC Gas. So 3 recent examples just between late last year and this year already. So the thrust of the question really is, do you think ADNOC will rely more on the feed to EPC competition model going forward, along with, of course, the conventional EPC model? Right. Can we have the results for this snap poll? An overwhelming 91% of you believe the role of feed to EPC competition will increase going forward. And I'll have to say I completely agree with you. It has only been growing since, like I mentioned, I think from 2018 at least, may have been prior to that as well. But especially since 2022, we've seen several experiments in the past as well. I think the Chev gas car project was initially meant to be a feed to EPC contest, and then of course it underwent a significant revision, and then several other projects. So we can't understate the importance of feed to EPC competitions in the projects market over here. All right. Let's now take a look at what is to come, and it promises to be quite the future that we have at hand. And here's a list of the 20 biggest Abu Dhabi oil, gas, and petrochemical projects in pre-execution stages. So at different stages of planning, from study, which is concept study and pre-feed, to feed, main contract pre-qualification, bid submission, bid evaluation. So all of these various stages are captured in this chart. We've spoken briefly about the Ruwais LNG terminal project, but we will take a quick look at that in a short while. And as you can see, most of these projects, the expected award year is this year and in 2025, which is why I sort of said a little earlier about this year sort of almost matching the level of project capital expenditure of last year, which was obviously driven by the Hail and Ghasha APC awards. Right, let's see what these projects are. Ruwais LNG project. The limited notice to proceed has already been awarded to a consortium of contractors for early EPC works. And it's a team that is led by French contractor Technip Energies, JGC Corporation, and NMDC Energies. These 3 contractors, this team has already begun early EPC works, but the final investment decision is expected later in this year, and we have exclusively reported on the fact that the full EPC contractors could be awarded as early as next month in June. The overall value of the export terminal project is $5.2 billion. And what is this project all about? The LNG export terminal is to be built in Ruwais Industrial City. Will have the capacity to produce 9.6 million tons a year of LNG from the 2 processing trains, each with a capacity of 4.8 million tons a year. And obviously, it's a very LNG export oriented project, really underlining the LNG ambitions that ADNOC and Abu Dhabi has. It might be worth mentioning at this point that this project was originally planned to be built in the UAE Emirate of Fujairah, which sits right outside the Strait of Hormuz on the coast of the Gulf of Oman. In May 2023, there was a slight course correction by ADNOC, and the company announced that it was shifting the project from Fujairah to back home in Ruwais in Abu Dhabi. Several process units will be part of the project, and it is expected to be that massive sort of imposing LNG facility that ADNOC and Abu Dhabi has yearned for many years. The Lower Zakum offshore oil field expansion, another major planned oil project in Abu Dhabi, and there are 2 parts to it. But before that, let's see where the Lower Zakum hydrocarbon concession is located. It's about 65 kilometers northwest of Abu Dhabi, offshore. And ADNOC Offshore holds a majority 60% stake in the asset. The foreign partners include an Indian consortium led by ONGC, Japan's INPEX, China National Petroleum Corporation, Eni, and France's Total Energy. So all of these partners have come together to increase the oil production potential of the Lower Zakum field to 520,000 barrels a day by 2027 and maintain that level of spare capacity until 2034. Now, this strategic goal is to be accomplished through the Lower Zakum development, a long-term development plan, LTDP1 project. The main EPC tender for this multi-billion-dollar Lower Zakum project was issued in March. Contractors have been invited to bid, submit bids by the end of July. I mean, that's when the technical bid submissions are due, while commercial bids are due in September. So some time to go before the bid submissions actually take place. ADNOC Offshore intends to award the EPC contractors for the Lower Zakum LTDP1 project by the end of the year. So another major capital expenditure commitment for 2024. And that's the larger long-term objective. The short to mid-term objective is to increase the Lower Zakum concessions oil production capacity to 450,000 barrels a day in the short term, and then increase it to 470,000 barrels a day. And this target is to be achieved through the Lower Zakum Early Production Scheme 2 and Prove Developed Producing Project, known as EPS2 or PDP project. Contractors submitted bids for this relatively smaller project in December of last year. And we believe the contract award for this project could take place in the coming weeks. So stay tuned to meet.com for that exclusive information as and when we report that we have our ears to the ground about that project. And then finally, we've spoken about the growth or the sort of elongation of the Abu Dhabi energy supply chain that ADNOC wants. It's not just about the hydrocarbon production. It's also about developing this really flourishing, thriving chemicals ecosystem that ADNOC wants to develop in Abu Dhabi, centered in Ruwais, of course. And TA'ZIZ, the joint venture of ADNOC and ADQ, has been put in charge of leading and sort of advancing this master development. And obviously, TA'ZIZ is the anchor developer. Now, on your right is a chart of the 7 specialty chemical projects that have been committed to be built as part of the first phase of the TA'ZIZ industrial chemical zone in Abu Dhabi. And you can see the various compounds and their end consumer use. Some of those projects have kicked off already. A joint venture of UAE-based Fertiglobe, South Korea's GS Energy, and Japanese investment firm Mitsui has awarded Declimon the main EPC contract, estimated to be about $1.5 billion for the planned blue ammonia project in the TA'ZIZ industrial chemical zone. That's the UAE's first blue ammonia project to be launched, and really tells you about the sort of new age projects that are coming to the fore here in Abu Dhabi. The JV has appointed KBR in turn to provide the technology license, basic engineering design, proprietary equipment, and catalysts for the low carbon ammonia plant, which will have a capacity of 1 million tons a year. Now, further spending on projects in the TA'ZIZ master development is set to drive capex on downstream and chemical projects in the UAE this year. So I'm referring to this chart on your right. A lot of all of these projects, the remainder on which the EPC contractors are yet to be awarded, are set to take place later this year. So really a lot of push towards the chemicals sector could be witnessed in the remainder of this year. India's Reliance Industries has partnered with TA'ZIZ and Shaheen Chemical Holdings, which is a local chemicals producer, to invest $2 billion in developing 3 chemicals plants. So those 3 are the chloralkali, the ethylene dichloride, and the polyvinyl chloride projects. Reliance is expected to award EPC contractors for all 3 facilities later this year, like I mentioned. Meanwhile, Swiss firm Proman has committed to building the UAE's first methanol plant at TA'ZIZ with a planned production capacity of 1.8 million tons a year. The Proman TA'ZIZ JV has issued the main tender for the project, and contractors are preparing technical bids as we speak. Again, keep your eyes peeled about the bid submission for this project and eventual contract award, which may well again take place before the end of this year. Now, this is what we have in the first phase. Dhabis is also understood to be planning or gearing up for a second phase, which will almost double the number of the categories of chemicals produced at the derivatives hub. So that obviously will follow after EPC contracts have been awarded for projects in the first phase. Right, that's all the time that I have for you today. In terms of the project market discussion, may I draw your attention one more time to that report I mentioned at the start of this presentation. It is really a phenomenal report, so do go and grab a copy. That's all you need to know. We hope we have the Abu Dhabi oil and gas market covered in depth, in detail in this report. And do not forget to use the discount code for $100 discount if you use this as an attendee for today's webinar. And as always, we are here to support you. Our growing team here in the Dubai office and across other global data offices around the world, in London, in India, in Australia, are there to support you in every form that they can. Please do reach out to the team for subscription-related inquiries for MEED.com, for MEED projects, the PIR reports, for example, the Abu Dhabi report that I just spoke about. We hold events throughout the year, so do speak to the events and marketing team for the various events that they organize on different industries, on different subjects throughout the year. And as well as marketing solutions that we offer to the market and to consumers. Quick snap poll question for you. On which of these products would you like to receive more information about? If you can quickly answer using any one of those three options, we will be grateful. And before long, I would quickly turn my attention towards some of the old questions. I'm sorry, the questions in general that have come through. There's a question from Mr. Shukla about the sentiment not being very upbeat in the market at the moment. And in his opinion, ADNOC is not very aggressive and many of the contracts were extended or delays as well. Contractors are not feeling very comfortable. Well, I will partially agree to this. Obviously, the years between 2020 and 2022 were not very good for the market. Several projects were awarded, well, not several, a handful of projects were awarded and then rescinded or cancelled, although some of them have been tendered back to the market in a new shape and form. But there were significant project delays. Let's not shy away from that fact. But things are really picking up as the numbers show, really. And it's not just about planned projects. You can see the volume of capital expenditure that has taken place over the last 2 years, especially last year, and that is really indicative of what is to follow. There's a question about some of these new projects plan to put combined cycle power plants as part of the EPC. Well, obviously, most of these projects are very energy intensive, and the emphasis is to sort of feed on clean power to power these, to sort of commission these facilities. So obviously, there are several PPP projects that Abu Dhabi, it may be ADNOC, it may be some of the other state-owned energy entities that are looking to develop to be able to power those facilities. So yes, there are several examples of combined cycle power plants. You would have to go through the power and water section of MEED.com, as well as the power segment within MEED projects, to be able to get a detailed list of some of those projects that you are asking about. And a lot of these projects are obviously going to be developed on a public-private partnership or PPP basis. Right. I think I just have time for a final question. Obviously, I am here. I'm not going anywhere. I will connect with you on a one-on-one basis. Obviously, as you would understand, the limitations of time dictate that I cannot take all of the questions that have come through, and there have been numerous questions. So I really, from the bottom of my heart, thank you for taking time out to tune into this webinar. I will just have time for this one question. There is a question about how much of the decarbonization budget of 15 billion, well, it stands at 23 billion as we speak, has been spent, and which projects I did mention the $615 million EPC contract that was awarded to Petrofac. There have been other projects, I can't quite remember off the top of my head, but there have been at least 2 other $500 million plus projects that have been awarded by ADNOC in the decarbonization domain. So yes, investments in that frontier is also picking up, and along with your oil production projects, your gas and LNG projects, your petrochemical and chemical sort of spending towards disease, and the further expansion of the disease facility, you will see a lot of these decarbonization projects coming into full gear with the passage of time. Right, I will have to drop the curtain on this webinar, but it has been an absolute pleasure to be with you after almost a year. I think the last webinar I hosted was sometime back in July, August. So it's been almost a year since I came face to face with you. I hope to come on board with another webinar on the oil and gas market on a different country or another significant market with you, and hope to provide you more information. Do stay tuned to MEED.com and MEED Projects for daily breaking news, analysis, commentary on the oil and gas market, as well as about other sectors, industrial sectors. And with that, I will take your leave and wish you all the very best in your business endeavors.